Thanks for clicking! Which Canadian banks are hoarding cash? This was the main question on this channel after I published a video of a CIBC report saying some banks were hoarding money.
You're just being selfish.
Indeed, the video came in the aftermath of news that the Bank of Canada had engaged in 3 overnight repo operations and then did one again yesterday, lending money directly to some banks as, according to CIBC, those with the money were refusing to lend. In fact, the issue is so serious that CIBC says that the Bank of Canada should impose penalties to those banks that are refusing to lend their cash to the other banks overnight.
Now, serious is what happens if you don't pay, by my hand.
And, if you'll remember, I had noted at the time that I didn't buy that Canadian banks were refusing to lend cash to their banking brethren just for the sake of it. That maybe they were refusing to lend as they didn't like the collateral being offered up by the other banks. So I took a look at that too, analyzing the quality of the collateral being held by Canada's big 6 banks. So what I want to do today is briefly go over which banks are holding the most reserves at the Bank of Canada, take a look at their collateral, and then discuss some remaining questions as to why the Bank of Canada is having to increasingly provide overnight loans to some banks. As we'll see today, this is an ongoing story with a number of remaining questions, some of which, hopefully, will be addressed at the Bank of Canada's press conference on Wednesday. We will obviously have an update out on that conference and continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these banks. Onto the banks. Which are the top 3 banks hoarding all of the cash at the Bank of Canada? To find out, I had actually put together a whole bunch of reports, gone through the data coming from OSFI, Canada's banking regulator, as well as the reports to shareholders from all of the big 6 banks. And then, once I had everything completed, I thought on a lark I would Google the phrase percentage of links balances owned by top, and then found this, the actual article from CIBC, and found in fact that I was correct, that it's RBC, TD, and the Bank of Montreal that, as of November of 2023, had the most settlement balances sitting at the Bank of Canada. But it makes sense. It was a CIBC analyst that called on the Bank of Canada to impose penalties for those banks which are holding so tightly onto their settlement balances, their cash reserves.
I'm not gonna let this go. You can't do that.
Now, the report from CIBC was from February of 2024, but it does line up with the data that I retrieved from OSFI, showing that RBC, TD, and the Bank of Montreal have, by far, the most money on deposit at the central bank. So, when we see the Bank of Canada engaging in these overnight repo operations over the past week, exchanging cash for collateral held on the books of the banks, chances are it's not trading that cash for that collateral with RBC, TD, or the Bank of Montreal. Now, I had mentioned in a previous video that I didn't buy that the 3 banks were just preferring to hoard their money for no good reason, that perhaps it was bad collateral or not great collateral that was preventing them from lending out their money.
Your stuff sucks.
But, upon closer inspection, it doesn't look like that is in fact the case. Taking a look at CIBC, its gross unrealized losses on its securities is only sitting at $292 million, compared with $403 million back in October. And on this, let's just briefly realize what we're talking about when discussing unrealized losses on securities, on government bonds, on US government bonds, on mortgage-backed securities, or securities that are full of various mortgages. Say I buy a Canadian government bond for $100 when interest rates are low, and I'm going to get back $101. But then, 1 year later, rates go up, and to get a similar bond now only costs $95, which is going to yield $6. Obviously, no one is going to want my old bond for $100 as they're only going to get a $1 profit. Ergo, I can't sell that bond for $100 anymore. Maybe I can get $95 on it. Therefore, I have an unrealized loss. Unrealized as I haven't sold it yet. If I did sell it, I would have to realize that loss. I would see that reduction of $5 in my overall net worth. But so long as I continue to hold on to that bond, I don't actually have a loss as of yet. And my guess is that's what's been happening to CIBC's collateral when we see those unrealized losses. It's Canadian government bonds, it's treasuries, it's mortgage-backed securities. It may be losing money on those securities on paper, as those bonds may have been purchased back when interest rates were lower, but those aren't realized losses as of yet, as CIBC is continuing to hold those mortgages, those bonds, on its books. But that collateral, as we saw, has actually been increasing in value, as CIBC's unrealized losses have diminished since October 2023, as have RBC's, as has TD's, and Scotia's. And the decrease in the unrealized losses, the increase in the value of this collateral, makes sense when we look at bond yields, which have plummeted since October, meaning those bonds, those mortgages held on the books of the banks, which still have relatively higher interest rates, are going to be worth more than they were back in October. And as the Bank of Canada lowers interest rates, or to be more accurate, as we see more potential loosening coming out of the United States and the bond market responds, that increases the value of those bonds that were purchased in a falling interest rate environment. So these mortgage-backed securities, these government bonds, don't at least appear to be the problem causing the Bank of Canada to have to enter into the overnight repo market, providing loans to some bank to some counterparty, of which, I should note, there could be many more besides the big six, with the list of primary dealers eligible for these overnight loans far exceeding those banks. Now, I still don't buy that these big three banks are just refusing to lend money for the sake of it, refusing overnight loans just because they all of a sudden became greedy.
I have an idea.
But it doesn't look as though, right now at least, as though bad collateral is the cause. Maybe it is, as CIBC says it is, the banks are just hoarding cash. But I will say that these overnight loans are increasing in magnitude, $13 billion as of yesterday, at a time when, according to OSFI, Scotia, National Bank, and CIBC have less than $15 billion on hand at the central bank. And if that is the case, if it is simply a matter of hoarding, as CIBC is arguing, then how long does this go on? Does the central bank just in perpetuity provide overnight loans to only a few banks? Those banks which don't have enough cash to conduct their overnight operations. Further, if that is the case, if that is the plan, that the Bank of Canada just continues to provide these overnight loans to these lenders, whoever they are, that are low on cash at the Bank of Canada, there is a question of fairness. Obviously, the Bank of Canada does not want these lenders to have to flood the market with their bonds, as that would send interest rates up, and all of these banks would have to realize those losses, actually write down those losses on their books. But if that is in fact the case, then shouldn't we be talking about the B word? If the Bank of Canada has to continually prop up these lenders that don't have enough cash to conduct their overnight repo operations, then isn't that a bailout? Further, can we all get access to that? There's a lot of Canadians who bought at the top of the market, who have seen the value of their assets, their unrealized losses, now be unable to borrow any money against those assets.
It's different.
If this is in fact the case, if these banks are low on cash because they put their money into other securities, into wherever they put it, and as such are no longer able to fund their overnight operations, then is imposing penalties on those banks that engaged in less risky behavior, those banks that are able to fund their day-to-day operations, their overnight operations, is putting a penalty on those banks really the correct answer? With that said, it is still early days. We don't have a whole lot of information as to why the Bank of Canada is having to engage in increasing overnight repo operations at a time when the banks still have $105 billion sitting in their accounts. But hopefully, we will get some questions at the Bank of Canada's press conference on Wednesday. We will have an update out on those questions on this channel. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.